So I think those two trends, the financing and the disparity in the cost of capital, are going to be two drivers where you could see some marquee strategic transactions occur in 2025.
Hello and welcome to the REIT Report. I'm your host, Sarah Borgson-Keto. Today we're looking at some of the key REIT and commercial real estate market trends for 2025 and what investors should be watching out for with my guest, Sher Hafeez, Senior Managing Director of JLL's M&A and Corporate Advisory Group. Sher, thanks for joining the podcast today.
Good to be on, Sarah. Thank you for having me.
So, heading into 2025, how is the REIT sector trading overall in relation to net asset value estimates? And how does this compare with what you've seen on a historical basis?
Yes, great. So the REITs ended the year 2024 9% on a total shareholder return perspective, and the year trading at a premium of about 5%. This is the overall REIT index that's trading at slightly above parity, so at about 5%. From a historical standpoint, that's pretty significant. The last time REITs were trading at any premium to NAV was back in late 2021, early 2022 period before the interest rate hike started to dissipate into the marketplace and impacted the commercial real estate market. So it has been over 2.5 years now where we've seen rates on in aggregate trading at a premium.
And are those premiums more concentrated in certain property sectors? And what is that telling us?
So, some interesting data points and deviations from what we've seen historically. And I'll point at a few of those, which I think are interesting. One of them is that office REITs have been trading at a premium, or a number of them, which hasn't really happened if you look at the historical trading history of office REITs from a premium or discount to NAV perspective. In fact, most office REITs have traded at a discount over the last 7+ years, and they've started to trade at a premium. So that is an interesting data point in the current market environment, especially counter to what you're seeing in the news and general media about office sector. The other one that's also interesting is shopping center REITs, which have been trading at a sizable premium as well. Again, not the obvious sector that you would expect would be trading at a premium today, but both office and retail sectors have been trading at a premium. On the flip side, industrial and multifamily REITs, which have been the darling for the investment community for the last few years, are trading at a discount today. So there's the other side of the coin there as well. A number of these interesting data points that I thought was interesting to point out at the outset.
Great. And to what extent are REITs enjoying a cost of capital advantage today as a result of their performance? And how do you think this positions REITs to deploy capital in 2025?
Yeah, like I mentioned, they're trading at an aggregate premium, and there are certain sectors that are taking the lion's share of the premium data point, right? Healthcare REITs, obviously data center, which have a lot of tailwinds behind them, as we've talked about, and you have talked about with other guests in the podcast, as well as office and strip center REITs. So a lot of these sectors who are taking advantage of this cost of capital benefit that they've had over the last, call it 6 months, the second half of 2024, and issued equity to shore up capital to be on the offense on in 2025. REITs raised about $10 billion or so of equity capital in 2024. A lot of that was raised towards the end of last year. That is more concentrated actually again in the sectors that are trading at a premium. When you look at the data and you look at the trends, and the management teams have taken advantage of that window of opportunity. Like I said, a lot of times those windows are as open for a long period of time. So you got to take advantage of it. And management teams that have that benefit have taken advantage of it. Office REITs in particular, as well as healthcare REITs and some shopping center REITs have all shored up capital to be more on the offense in 2025 than they were in 2024. So I'd expect the REITs to be pretty active acquirers of real estate as compared to the last couple of years.
And do you think we could see any sort of marquee transactions in 25 that really stand out?
We could certainly see that. And what I would say, let's define marquee transactions. So that could mean M&A, obviously, large strategic transactions. And we could certainly see that. So just talking about that aspect a little bit, to me, like there are two broader catalysts of M&A transactions. One is availability of financing for a take private transaction and or a transaction where the REIT may be going private. For that to occur, the financing market has to be pretty open and be pretty liquid in large quantities. We have seen that certainly in the CMBS market, which has been very active, raised about $100 billion of CMBS capital, a lot of that in large loan capacity. So that market is certainly open, especially for certain asset classes like retail and multifamily and industrial. So that will be one catalyst to see some large transactions. The other one I think I would point out to, which is a nuanced point, is some of the data we looked at when we worked on and put together a monitor. What we saw in 2025 is just digging into the next layer of premium or discount to now, we bifurcated between sectors or within sectors the top performing and the bottom performing REITs by their trading premium or discount to NAV. And the disparity in the top performing and the bottom performing across pretty much every sector increased. Today, based on our estimates, it's about 55% difference, meaning like the top performing two or three REITs versus the bottom performing two or three REITs had a difference of premium of 55%. That number last year around the same time was 37%. So there's always a premium, but that premium has increased quite drastically. What that tells you is there's a relative cost of capital advantage for some of the REITs that are trading at a better cost of capital, which in a lot of cases could lead to strategic transaction and merger activity where, especially with the stock for stock is one of the considerations. So I think those two trends, the financing and the disparity in the cost of capital, are going to be two drivers where you could see some marquee strategic transactions occur in 2025.
And any particular sectors that you'll be watching more closely for that activity?
It's going to be pretty much across a lot of the sectors. I would say what are interesting sectors are obviously the ones that I already mentioned: retail, office, multifamily. Some of the larger, more sectors that have a lot more sort of volume in terms of the number of REITs in them, which could see that activity to. So I'd say I can't pinpoint a particular one, but I would certainly highlight three or four of those where I could see that activity spike a little bit.
And what are some other key points for investors in REITs and commercial real estate to be watching in this year?
Yeah, so a couple of things. Obviously, interest rates have been a big driver of performance more than even the fundamentals in 2024, and they'll continue to play a pretty big role. Sitting here today with the 10-year treasury at about 4.5%, obviously, is on people's minds in terms of how they allocate capital and when and where and how. So that's going to be a continued theme from 2025 that we're going to see in 2025 also be an important driver of REIT performance and just commercial real estate activity performance. The other aspect that we at our the investment banking platform within JLL have been seeing a lot of is more focus by investors, global and domestic, on acquiring platforms with or without acquiring real estate with them. So what that means is, obviously acquiring companies that are vertically integrated, companies that have a lot of different levers to pull in an economy, which could be up or down. So I could see a lot more of the platform investing activity, which we've been very actively involved in the last 2 years, continue. And all major sectors that I mentioned will be beneficiaries of that activity, I would think. So I would look out for platform investing as a key theme that we're seeing continue to play out in 2025.
Anything else that we haven't covered so far today that you were watching in 2025?
One thing I would point out, obviously, it's a volatile environment in the marketplace and continues to be, but we're seeing a lot of tailwinds and green shoots out there. We covered some of those in the monitor, but just to name a few, obviously, we're tracking the institutional equity participation in the commercial real estate marketplace, which has increased over the last few quarters. We are tracking a lot of the core funds and sovereign wealth funds that are starting to come back in some force into the marketplace. as well as fundraising environment starting to be a little bit better for commercial real estate in general. So some tailwinds that we've pointed out in a lot of detail, but I know it's tough to kind of look at that sometime when you're watching the ticker every day going up and down. But some long-term themes have us pretty bullish on commercial real estate in 2025 and beyond.
Sher, thank you so much for joining us today.
Absolutely. My pleasure.
And to our listeners, if you enjoyed this episode of the REIT Report, please subscribe on your favorite podcast platform.